futures market, demand, supply, cocoa, chocolate, industry talk, and of course sustainability. And today we have a very fine guest who is going to talk about technical analysis, aka chart analysis on the cocoa future market in New York. Hello and welcome to another episode of the Von Alm Cocoa Talk. My name is Gerald and today I have a very special guest here who is talking about technical chart analysis on the cocoa future market in New York. Darren, welcome to the talk. Thanks a lot for being here.
Hi Gerald, thanks for having me here and thanks for taking the time.
Sure, it's an absolute pleasure. So what's your story why you're here?
Well, I first of all would like to say to everyone that there's something interesting going on with cocoa right now. And I would say, I'll get into the details in a moment, but I first interacted with cocoa, of course, from the Life London days. So that was when I used to cover that soft commodity basket along with...
So sorry, you have been with Life Ice London?
That's right,
yeah.
That's right. I was based here in Singapore, but basically looking after a few regional markets here in Asia and promoting soft commodities as well as agris, like wheat and so forth, index futures, interest rates. And, throughout this process of speaking to all the commodity trading houses, the hedge funds and all the brokers at the investment banks and so forth, I realized, something's missing here with advice or the analysis of the cocoa market and all the rest of them that I felt I could perhaps share. And that's some insight that I had developed on technical analysis over the years, where I just thought, okay, there's a way I can share some of that edge to all these groups that I had met over these years. So I launched Tradable Patterns, my startup, to basically address that void, which I felt some of the investment bank sales.
Tradable Patterns.
That's the company has a website, tradablepatterns.com, and it's a daily analysis that I provide on different markets, which include the softs, but also crypto and.
Crypto, nice. Okay, cool. So you're doing a TA on crypto as well? Well,
there's a lot going on in crypto these days, and I'm sure most of your audience is well aware. We've seen some interesting moves. And, I basically launched crypto as a newsletter, a separate newsletter to my sort of main flagship newsletter a while back in 2018 when I saw that, despite the crypto winter creeping in at the time, it was a market that was going to stay.
The crypto winter creeping in. I feel that's pretty cool to put it. But okay, you know what? On the crypto, let's go back to the crypto at the very end of this talk.
Yeah, we can do that.
You have a feeling of where it might go to, right?
Yeah, we can save that for later.
That's cool, yeah. So, but then again, you have been with ICE and now this Tradable Pattern for how many years have you done it?
So I've been running Tradable Patterns now for 7 years.
Okay, 7 years.
Yeah.
Cool. All right, then you got a chart with us here today?
Sure do.
Cool. So I think what you can see here is a candlestick chart beginning with 2020, right, till now, weekly candlesticks, correct? And what I can see here, a big drop in 2020, of course, that's COVID. And now starting about, or talking about prices more recently from beginning of this year, I feel like it's kind of a sideways pattern. And yeah, I don't know, where's it gonna go to?
Yeah, that's the million-dollar question, isn't it? So I see the early rumblings of a potential trend reversal to the upside. Now, still early days. We need to reclaim some key levels. For instance, 2,500, I think we're just about there today. And so I'll dive in a moment on some of the details on what's happening on the daily chart, and I'll show why I believe we're about to see some higher highs.
Ah, that's nice.
Yeah.
Okay, cool. Then why not diving into the details?
So we're now going to dive into the charts here with a little more detail. We're looking at a daily chart actually here. I just wanted to highlight how if I connect the major lows that we've seen in the past year or so, with this major low here being the July of last year low, and the higher low from November, and a yet again higher low in February, you can basically see we've had an uptrend which was briefly broken in late March. Okay, so some bears would have been short selling cocoa at that candle here of the final day of March, actually, well, second last day of March, where we basically had what I would consider a bear trap, because we've come back above that point of breakdown. You can see that in the last 2 weeks, we've clawed our way back to near 2,500. In fact, today we're up almost 1%. What I want to, of course, add as well are some of the resistance lines, okay? So I just want to make clear to your audience that we're actually in a couple triangles here. So this is a small triangle, and I'm just going to broaden the time frame a little bit so that we can draw a.
What does a triangle mean?
So it's a consolidation. You know, after a big move, and we saw the collapse post-COVID. So as soon as COVID, or the media began covering COVID in around February, we saw the market come off dramatically. That was the reason for the steep drop. And then, of course, the market went into this optimism phase where the economies were reopening one by one, and of course, we then started backpedaling again more recently, sideways but slightly to the downside, right? So that accounted for this recent slide, which is the fact that some economies, some countries have gone through another series of lockdowns with their so-called third wave of COVID infection. So more recently, if we zoom in, the million-dollar question once again is, okay, so is this another fake out? And where do I see things going from here? So
is it a bear trap or not, right?
That's right. And so by combining what I've just drawn with these trend support resistance lines with these momentum indicators down below, what we see here is RSI, stochastics, and MACD basically sloping up in the recent action. And that confirms the fact that the price has been going up, right? You want to see both sloping up for there to be more confidence. And if we do have a daily close above 2,500, and I do think that's imminent. I mean, we're just shy of that right now. You can see from the price down here. We are looking for just a few more breakouts. If we can have a daily close above this triangle resistance line, say at around 2,600, then the next target to the upside would be where this next resistance line intersects. So.
Now my question here, so I understand basically a triangle means a kind of a consolidation, and since it's a triangle, it's pointing in a certain direction, right?
That's right.
And so yeah, there has been a dip below that, which someone might call a bear trap, obviously, a trap, and because it recovered. So now it's heading to the 2,500, supported by your indicators down below, like momentum, RSI, stochastic, and MACD. And now you're saying, okay, 2,500, that also seems to be at this tip of the triangle, so that makes perfect sense, right?
Yeah, it's pretty close to the triangle resistance.
Okay, cool. And now, what's next?
So
More highs, further highs? Or?
So I think the bows will become celebratory once they see the price breaking on a, well, if we can close on a weekly basis above this triangle resistance, and you know, even more importantly, the 2,600 level, then they'll be targeting this 2,750 range. Nice. And then of course this November high of 2,800, it comes into view, right? So the key thing now is we have to see higher highs. We've seen the higher lows, right, that I just pointed out, but if we get a higher major high, so for instance, if the May high, I wouldn't say the April high, but if the May high can exceed the March high, then that's where things start getting interesting, because the March high is substantially higher than the current level. It's around 2,650. So that's what we really should be looking for, a higher May high versus the March high.
Okay, and if you get that, then we're going to...
Yeah, there'll be some serious momentum that could bring us towards the 2,800 of November.
All right, cool. All right, thank you very much. This was very insightful. So my key takeaway is you're pretty bullish in the cocoa market.
Definitely more bullish than I've been in the last couple of weeks. I think we're going to just wait for a little more confirmation here before the more aggressive bows bring cocoa to the next level. It is remarkably interesting to follow right now, but let's just wait for that confirmation.
To go for even further highs.
That's it. That's
like
exactly it.
27, 20, and 800 in that kind of.
Those would be the key levels. Yeah.
Excellent. Wow. So, currency, cryptocurrency. Give us a hint on that one. You're doing this as well. So,
right.
What is your outlook on that? I mean, in a nutshell.
So the high level view is we're, in my opinion, in a bubble territory. However, that's not to say that the industry doesn't have a lot of great things happening. Look, every time a bubble, even if it pops, we get the next wave of adoption and the next set of innovative technologies introduced in the aftermath of the bubble popping. And so it's not something to fear that could possibly take away from the exciting developments that we're seeing. All it really means is that those who are excited about crypto will have another entry on the long side at lower levels. And that's something that we should all look forward to. We should all celebrate that we can get in at better valuations.
Okay, well that's cool. So what you're saying is, okay, kind of a bubble at the moment, so it might come further down, but that would provide new opportunity for new entrants
It's healthy for the long run. I do think that what we're seeing obviously is something similar to what happened in the dot-com boom and the bust that followed. We had some strong players emerging, Amazon, etc., and we're going to see the same thing with the crypto industry. So
perfect. That was really nice also to have a quick one on the crypto. So thank you very much, Darren. It was a pleasure to have you here.
Well, thanks for having me, Gerald.
Hopefully to see you soon again.
I would love that.
Yeah, awesome. And the next one, however, next talk is going to be released next week, which is with Mark Donaldson, a veteran in the cocoa industry, 38 years. I think he has a lot of interesting things to share, in particular on the sustainability part of the industry. So yeah, thank you very much. Please don't forget to like us on LinkedIn. It's always very nice for us, and hope to see you soon again. Bye bye.
Bye now.